the opportunity is that there will be great opportunity. There has always been, and these changes in the markets have been such a tremendous transfer of wealth in these big market adjustments.
Rob, welcome back to the show. Honored to get to spend this much time with you and just you being so willing to share your expertise with the listeners and myself. Thank you again.
Oh, it's my pleasure, Whitney. Thank you so much for having me. I love it here.
Rob, I with your experience, and I hope the listeners will go back and listen to yesterday's episode and learn more about Rob and 30 Capital and the book that he wrote as well. But he's been in commercial real estate since he was in diapers. It sounds like so. I just love that level or depth of experience, and especially with a few things we're going to discuss in this segment. Because I get asked all the time, and I know Rob does as well, it's like, what's going to happen? What do you think is going to happen? And, and I love gathering just, what people are looking for or watching or what's important to you. And I say, well, nobody has a crystal ball. However, what you believe is going to happen affects what you're doing today, right? Whether you're buying or selling, or how you're handling yourself and your business is affected by what you believe, right? And so I love it when somebody has an experience like Rob to think through, hey, what is their vision for the future? And the trends they see happening. Rob, let's just jump right in there. I would love to hear, just sharing your thoughts, your vision for what's happening in the future for commercial real estate or in our industry, and just let's dive into some current trends you see happening.
Sure. Well, I think, look, it's, just on your crystal ball thing, I think, people can make assumptions on what's going to happen. I think there's a difference between making sort of a gut assumption versus one that's filled with fact and data or data and information and making an educated decision. And so I think that, we like to believe that we make educated decisions, but then you definitely have to look at this gut feel, right? There's stuff going on. So, in terms of the broader commercial real estate market, I have been around enough to know, and I've seen the markets adjust and correct. And I've seen them adjust either because, back in the 80s when everybody was cross-collateralized and personally guaranteed loans, good loans went out with bad loans, and, there was a huge transfer of wealth. And in 2007, where you had the great crisis. In my opinion, and here's where this is an exciting time. I don't think anybody will doubt that commercial real estate is going into some serious headwinds. I think we have two factors that have really prompted a big problem. One is increased interest rates. So now it costs a lot of money to borrow money, whereas in the past it didn't. And second, you had this work from home phenomenon that, because of COVID, has really changed the dynamics of things. I think when you look at the data going back to interest rates, you can look at forward curves, right? I can't guarantee what the Fed's going to do tomorrow or next month or whenever, but I can tell you, if I look out at a chart, I can see where the market is predicting where interest rates are going to be. And just knowing us as a country, interest rates will go down in the next few years. But for the next foreseeable future, expect this rate or higher. The question comes down to the things like the work from home phenomenon. The people are hey, we just want to, I want to work from home. I don't want to. You see the headlines. What happens to suburban office? What happens to these offices? And yes, people talk about, oh, well, I can reuse them. Well, you can, but it costs a lot of money. Not to mention, if you're going to buy an office building and it's existing, you still have to maintain the thing. You still have to pay taxes. You still have to pay, so it's all of a sudden you're in a rut. Not to mention, I think, there are some exceptions in some of these markets, but if you really peel back the multifamily market, you're going to find a lot of headwinds there as well. And so it's going to be really hard to go forward and develop a brand new Class A multifamily when you know that there's a handful of properties in your market that are going to be going back to the lender and are going to be sold. And so that's where we start to see that. To me, is where there is some headwinds and some struggles. Flip side, the opportunity is that there will be great opportunity. there has always been, and these changes in the markets have been such a tremendous transfer of wealth in these big market adjustments. Where in the past, as I said, I mentioned in the 80s, it was real estate investors basically went out, and anybody who had dollars and liquidity, doctors and lawyers, ended up getting a huge portfolio. The second time around, people with money, these big investment shops were able to. So I think that this is a time for people to look and think differently as they look at opportunities in these markets. Also, can't stress enough, cash is king, liquidity is king, and please, for heaven's sake, focus on cash and cash management. And that's a tough thing for people to hear right now, because people came in with an initial investment thesis. I'm going to buy this property. I'm going to put this much money into it. I'm going to improve it. Rents are going to go up, and we're going to be able to sell it, and it's going to be great. Well, that might have happened a few years ago. That's not happening as much right now. So it comes down to really thinking a long-term approach, looking at the asset, looking at realistically, what are my cash projections going to be? Do I really want to improve it? Or maybe I should just hoard cash right now and be protected. Should I talk to my investors and say, hey, listen, I have two choices. I might have to make a capital call down the road, or maybe I'm not giving you your full distribution right now. Which one's more palatable? So open conversations, open communications. But once again, it's about operations right now, finding operations.
I love how you even took it all the way to communicating with investors, because it's like when you're in trouble like that, there's a chance, hey, if we just pause distributions, we may be able to survive, right? We may be able to get through the storm, right? So we don't have to do a capital call. It's like most of our, that's just like a word we hate even saying around here, right?
Right.
You just don't want to ever have to do that. But I know, I believe, Rob, that, probably within the next at least 12, if not, or at least 18 to 24 months, it's going to be a very common thing, I'm afraid.
Yep. And I forgot to mention that, I talk about interest rates and I talk about work from home. Yeah, I forgot about the third thing, which is, expense inflation, right? You've got insurance, which is out of this roof. You've got, taxes that are going up. You've got finding people, so you have this incredible expense. And you're right. This conversation, and we actually at 30 Capital, we spend a lot of time helping people with the facts and plan so that they can have those conversations with the investors. And we can say, hey, listen, I talked to in the last episode, we talked about, is it the market or is it me? And one of the things that we bought a company last year that aggregates operational data and gives us the ability to determine where our property is, basically in terms of revenue and line by line expenses, where our property is relative to a benchmark. And we can say, okay, well, you know what? Hey, revenue, we're all flat. Expenses, we're all up, right? And we can say, hey, you know what? This is actually the market. We can also see before we have this conversation, hey, wait a second, everybody else's revenue has gone up. My revenue is actually flat. Oh, my expenses are going way up and everybody else's are sort of flat, holding still. So maybe it's me. So the first thing we often suggest is take a deep dive into your asset and your operations. Focus on asset optimization first. Once you've got the asset and once you have the strategy for asset optimization, then you have to come back and basically tie it into debt optimization. Based upon the asset today and where I'm going to see it over the next few years, what's the appropriate debt? Where is my outstanding debt? How does this look? Right. And that will solve two very important questions for you, right? Am I optimizing my asset? Yep, I can get there because I'll have a plan. Debt, this is what I need to do. Now we take the two, and that will basically determine your conversations. Your equity optimization will determine your conversations with your investors.
Yeah. And the sooner the better that you know those things, right? If you don't already, to optimize your operations. It's similar to what we talked about in the last episode. Like you said, man, it is a time for asset managers to shine. like never before. And, anytime, even highlighting yesterday too, is like anytime tech can help you to lessen errors, or potential errors, and even the speed of the data. Right.
Mhm.
That's one thing I love too. It's like the data is immediately, on your dashboard every morning versus having to go collect it every day, right? Or go to 12 different places and pull it together. I think that just helps you to make decisions so much faster and more accurately, to say the least. One thing you mentioned was, it's going to be a major opportunity, right? Cash is going to be king. Those things. Any suggestions, just even for our operators, even our passive investors, to be prepared for that, right? I think it could be a scary time too, right? We got all this cash, maybe they have cash, right? And it's like, when do I jump in? But I don't know. Just any thoughts on helping those prepare?
Well, I think it comes down to, when to jump in is always a question, right? I think I mentioned on the first one, we bought the majority of our portfolio in 2010. That was a pretty good time to jump in, right? And I kept on buying, but I kicked myself. I pretty much stopped buying, and probably around 2018 was probably our last. 2000, maybe 2019 was our last acquisition wholly. We still invested with sponsors all the way up until probably about a year or so ago. Actually, that's not true. We still invest actually up to the last year. But jumping in, it all depends on what you're jumping into, right? So a 30% occupied suburban office, okay, sure. If you're going to jump in today, you better get compensated for it, right? And that might be a great play, by the way. Those are, I mean, there's a lot of people out there, and myself included. I don't think I'm necessarily opposed to well-positioned office buildings in key markets, right? Once again, it's looking at data, right? I've got to make sure that I've got the facts and figures behind it: census data, growth trends, people moving there, quality of life, all the things that typically go into our investment thesis, anyways. You know what? A decent multifamily that maybe I'm buying at a little tighter effective cap, but you know what? And it's definitely not the home run that I had before, but you're not going to find those right now. And I think the other thing too is, having gone through this several times, the amount of liquidity that comes into these markets sometimes is so great and so big, you can't underestimate it, right? And that's what we're feeling right now, is this time, this before all of that. And that's what I think that's what makes it very difficult. I think many people would just say, hey, listen, let's just get it over with. Let's have our correction. Let's get back, right? Let's go back to recovery. That's not going to happen for a while, because sellers don't really want to sell until they really have to. And buyers think that there's going to be a heck of a deal. And so it just becomes that, that's why we have sales data. It'd be tough to be a commercial broker right now, an investment sales broker, right? Because their business is down 70%. So I think that's the way I look at it: is this going to be a decent deal? Can I pencil this out? Once again, taking data and facts, matching the property pro forma with a debt horizon and a debt optimization will create equity optimization for you.
Yeah. Wow. Yeah. We're playing chicken, kind of, right? As a buyer and seller, right? To some degree. And the more information, the better. Rob, what's the most challenging part in your all's business right now?
Sort of that indecision in the market, right? Our capital markets group, which relies on transactional volume, right? So our capital markets group, it's defease with ease, and we do hedging advisory. So obviously, if you're not selling a loan or getting a new loan, you're not, you don't really need those businesses as much. So that's obviously a challenge, right? Transactional volume is down, makes our business difficult. On the flip side, fortunately for us, our asset management side and our technology side is going quite strong, because there are borrowers and there's sponsors and investors who are in a situation where they're just looking for some third-party advice. Hey, how do I talk to my investors? How do I get the facts to know that I'm doing the right thing? And how do I actually look at information? And our technology business is strong as well, but it's the same thing. People don't want to spend money when the market is bad, right? It's always the same. It never fails for me, right? It's back when we started our business in the technology, the asset management space, everybody was doing acquisitions, right? You'd buy properties, hold it for a year, sell it, and make a lot of money, and you were a genius. Nobody really cared because it didn't matter. You didn't know that the person next to you did the same thing but made 3 times as much. All you know is that you made a lot. And so that masked the operations that we're feeling today. Now it's really into the operation side, but they don't have those big engines of acquisitions feeding so much revenue into the organization. So yeah, it comes back to, I think in that particular case, we stress that people need to look at their operations and need to look at their business. And I think that's always a challenge because people are very tactical now. They're looking at individual triage, right? It's this property is 123 Main Street. That property is in trouble. I need to focus on that. And we're trying to elevate the conversation to say, think about your company as a technology company or an innovative company whose product is real estate, and focus on elevate. If you can elevate your decision making and make it more strategic, all of the tactical stuff gets a lot easier and a lot better.
Rob, we're going to shift gears just a little bit to a few final questions, but I wonder, your advice right now, your best advice for passive investors.
So for passive investors, I think, this is it. It's still a great investment class. So don't, so I think there's 2 things to look at. One is enjoy what you've had in the past. Probably not going to happen right now for a while. But I would recommend that they still understand the asset class, which is a great asset class. The second thing I would probably really recommend is having open and frank conversations with your sponsors, right? This is a lot of this stuff is a lot of things that happen at once. As I said, these are big things, right? You've got a pandemic, you've got interest rates, and you've got inflation in core expenses that are just out of control. So having frank conversations, open conversations, and almost opening the door for the group to do that, for your sponsors to do that, I think will be a big investment, or will create good return for them. And then finally is be prepared. There will be opportunities. Trust your sponsors. Trust that they know they're living this stuff every day, and understand that they're going to see opportunities. Jump in on those opportunities if you believe them.
What about, I know we talked about, some KPIs that you're looking at every day on your dashboard and whatnot, but I always like to ask what are some of the most important metrics that you track? Maybe there's some on the personal side as well that you like to track.
Yeah, so I look at this as 2 ways, right? So I go back to this notion that my real estate business is a business itself. It's our product is real estate and real estate investment, but our business, and so I operate our real estate investment arm the same way that I operate our advisory work, our capital markets work, our stuff. We look at, we look at our customer personas and all of this other stuff. So from KPIs on the property side, I look at things like leading indicators. How many people are coming in? What are they getting? What did they swap out for, right? So if I had a 1 bedroom, this 1 bedroom, 1 bath went for $1,000 a month, and now I, turned it for $850. What's going on, right? So I look at my leading indicators, traffic, and then what I'm swapping out for. I look at delinquency, tracking delinquency. I'm tracking accounts payable, and those are really the metrics that I look at a lot. Now, I will look at month over month. I will look year over year, quarter over quarter, general financials. But those are the big things that I look at. On a business standpoint, though, I'm looking at things like how efficient are we as an operator? What's our capital? What's our cost of capital? What are we returning in our capital? How effective are we as a whole, as our portfolio? What's our total delinquency look like? What does our total traffic look like? What's our Yelp scores? What's our apartments.com score? What do we do? How long are people staying with the organization? So there's a lot of business KPIs that we use at our organization as well.
Love that. I think that's a great list right there for any of us to be thinking through. Are we tracking those things? Do we know that? What about any habits that you're disciplined about that have proved success for you?
Yeah, I think, the discipline is one thing, and whether or not it's a good thing or a bad thing, I still have yet to figure it out. But I believe that the one thing that I've enjoyed doing and I've done doing is I'm a voracious learner. And I got this from my dad. My dad reads books like nobody's business. I mean, he reads thousands of books a week probably, and always information of every bit. And while I might, I read my share, but I also love YouTube and I love other ways of podcasts. I love other ways of consuming information. I've realized that by taking in information and listening to things outside of commercial real estate have yielded such great returns. So my advice to people, and people actually ask me this quite a bit, is what else do you learn, right? How can I be smarter in real estate? How can I learn more? I say, by not really looking at real estate, learn about other things, right? I think a lot of the things that we get from as I said, I run my real estate business very much like a software or a technology company. And I think if we start applying, what do those companies do? What do these big technology companies do that make them so good, that make them grow so quickly? And if we can apply some of those things to our business, we will be very successful ourselves. So it's about learning different things and having varied interests.
Any hacks around reading and learning fast like that?
Well, I think it's just maybe it's just ADD. I don't know. I think that's probably part of it. As I said, I think it's whatever you're better off doing, right? Some people are readers and they underline and they make notes. Some people take that. Some people need it to be listened. I mean, I think a lot of it is just the way that you want to get your data. When I was writing my book, I went to master class, right? I'm like, okay, well, how do I learn how to write a book? Okay, well, geez, I can learn from James Patterson. I can learn from some of the best people in the world. Okay, I'll go listen to that. And I think that's a lot of it. And I think if you have these varied interests, you'll also see a tremendous world of opportunity that will grow. And I think it's the other thing that I do that I hate mentioning that I do, but I do take calls with salespeople. If there is something that's out there and somebody's trying to pitch me, not all of them. So don't get me wrong. So don't go. I get every LinkedIn request now. Like 9 out of 10 are, hey, I saw it. Hey, we're just like each other, but I just want to sell you something. But I think it's being open-minded to seeing what other people are doing. I mean, there's some pretty amazing things that could actually help your business that could just be right in front of you if you just sort of. Maybe it's not buying that product, but maybe it's understanding why they're selling the product or why they created it will create great returns for you.
Yeah, love that. I love the desire to learn and read a lot, and it has proven just time and time again for me to just have so many, returns on that time of investment, right? And reading, and like you said, reading things outside of our industry have helped me a ton as well. I love another comment you made there that your dad reads a lot, right? And I wasn't raised to read a lot. It's a major loss. I feel like that, I wasn't pushed to read more, as a child, because now I'm just trying to take in as much as possible. And I want my kids to want to read, right? And so we're trying to just encourage that, as much as possible. And thankfully, my older boys do like to read and are reading a lot, but it's been good. It's been really good to just have a habit, right? Of the desire to want to continually read, like you're talking about, but even the applying what other industries are doing right into ours and being in a new ideas right into our market that haven't been here before. Rob, how can the listeners get in touch with you and learn more about you and 30 Capital?
So they could go directly to 30capital.com. They can also reach me at www.robfinlay.com.
You want to tell them about your book and about that, so where they can find that?
Sure. So yeah, thank you. We released my latest book. It's called Beyond the Building, and how innovation plays a part into commercial real estate. And this book really came from my background in commercial real estate, not only as my own insight, but also I was very fortunate to get a lot of real estate sponsors and real leaders in the industry to help give me insight and information sort of on how they do things. And being in this business for so long, it's always nice when you get to see somebody who's been, who's done something a little different that matters and makes a difference. And Whitney, as you know, you're actually, I mentioned you in my book because of what you've done actually with this podcast. I think is incredibly innovative and quite frankly, genius on how you built your brand and differentiated yourself. And I think that's sort of the goal of innovation. And that's what the goal of the book is to help real estate owners realize that they need to innovate, or else they're going to be the way of the Kmarts and the, and the Blockbusters.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.